Tech stocks roared back from a low in April as the broader market experienced a strong rebound on interest rate cut expectations, cooling inflation, and big earnings beats in Q2 2025. Even as tariff rates spiked, corporate profits held firm, supported by resilient consumer demand, steady economic expansion, and AI-fueled investments. S&P 500 technology sector earnings grew nearly 23% year over year in Q2 2025, second only to communication services. The tech sector is expected to deliver the most growth in Q3, with analysts projecting earnings to rise by 20%, according to FactSet data. While all 11 U.S. equity sectors are positive year to date and major indices have notched all-time highs in 2025, technology has rebounded sharply since April 8th, making it the second best performing sector this year. Where the gold rush is driving the materials sector, AI megatrends continue to fuel record spending on chips, cloud infrastructure, and data centers, pushing tech stocks to new heights. More than $300 billion in new capital was committed for AI expansion in Q2, while the industry saw record M&A activity in a race for emerging capabilities like voice, gen, and agentic AI. The global AI market is expected to reach $3.68 trillion in 2034, according to Precedence Research, amid burgeoning demand for AI technologies in a range of industries such as automotive, healthcare, finance, manufacturing, and retail. Among the top needs will be hardware-based AI products for end-use applications demanding lower power and higher performance. Beyond AI, another major technology trend is advanced connectivity, including 5G and 6G networks, Wi-Fi 6/7, and satellite networking, expected to bring new opportunities in broadband expansion, aviation, defense, and global internet coverage. Communications equipment and satellite networking are highly impacted by technology and also set for steady expansion as global demand for connectivity, defense, and mobility grows. We'll have a look at 6 top tech stocks for the fourth quarter that offer products and solutions spanning industries such as semiconductors, electronic manufacturing, communications equipment, smartphones, and EVs. First one is communications equipment, CommScope ticker symbol COMM. The company's share price surged in early August after Amphenol announced it was acquiring CommScope's connectivity and cable solutions business for $10.5 billion. The cash will allow CommScope to repay all debt, distribute substantial excess cash to shareholders, and focus on its 2 remaining high-growth businesses. CommScope crushed Q2 earnings by 85%, driven by growth in the company's 3 segments. 1. Connectivity and cable solutions. 2. Networking, intelligent cellular and security solutions. 3. Access network solutions. The company's access network solutions revenue surged by 65% in Q2, driven by strong demand for DOCSIS 4.0 broadband upgrades, while Ruckus rose 47% from new Wi-Fi 7 products. Comm continues to outperform the sector and industry peers, up about 200% in the past year for an A+ momentum grade. Comm has delivered solid growth in revenue and free cash flow in the past 12 months, while handily outperforming the sector in net income and EBITDA margins. EPS is expected to reach $1.29 in fiscal year 2025, bouncing back from 9.3 cents in fiscal year 2024, according to consensus estimates, and revenue is projected to grow by 25% to $5.28 billion. Strong collective investment fundamentals and excellent growth make it a top stock heading into the fourth quarter, particularly as it's trading at an attractive 13x earnings, a 40% discount to the sector median. Celestica has soared by more than 400% in the past year. Services stock, a 2-time alpha pick, and one of our top AI infrastructure picks. CLS surged in July after posting its largest earnings beat in over 2 years, on the strength of its connectivity and cloud solutions segment, which builds hardware enabling AI-driven data centers. Celestica delivered outstanding Q2 2025 results, with revenue and adjusted EPS soaring 21% and 54% year over year, while management raised its full-year guidance across all major metrics. CLS sets itself apart with a combination of outstanding growth, momentum, and potential earnings upside relative to the tech sector. A massive surge in EBITDA, EPS, and leveraged free cash flow are the top drivers of Celestica's A growth grade. Celestica's operating margins are in line with tech peers, but ROE of 30% and ROTC of 17% blow away sector medians for a solid profitability grade. It has 12 upward earnings revisions in the last 3 months versus no down revisions, and EPS is expected to grow by 43% in fiscal year 2025. A dip in Celestica's valuation grade temporarily pulled the stock into hold territory. CLS is trading at high earnings multiples, but its forward price earnings to growth of 1.94 is only a slight premium to the sector median. CLS is one of the hottest stocks in the sector as we look forward to the fourth quarter and potentially capitalizing on Celestica's bullish momentum, growth, and profitability. Micron is up nearly 80% in the past year, and one of 2 picks in earnings hysteria. Micron continues to trade at attractive multiples despite booming momentum, strong profitability, and high earnings growth expectations. A key competitive differentiator is Micron's leading position in the low-power DRAM market for data centers. The valuation framework clearly sets the stock apart from NVIDIA and similarly sized peers. It's trading at 20x earnings versus NVIDIA's PE of nearly 40x, while Micron's price earnings to growth of 0.22 represents an 88% discount to the sector. Micron's A-plus profitability grade is driven by 46% EBITDA margins and a CapEx sales ratio of nearly 40%, indicating the company is reinvesting a substantial amount of revenue. Micron's data center and AI market pricing power are helping fuel its profitability as its forward estimated earnings per share for the upcoming year, long-term growth rate of 89%, showcases a strong growth outlook. Micron's leadership in high-performance DRAM and NAND offers a technological advantage, helping fuel Wall Street analysts' optimism. It has 22 upward earnings revisions to no downward revisions and is due to report Q4 earnings for its 2025 fiscal year on 9/23/2025. Micron's Q4 2025 EPS is projected to grow by 142% and revenue by 43%, with annual earnings projected to grow over 520% in fiscal year 25. If this highly popular semiconductor stock isn't a building block consideration for your portfolio, consider one of the largest chips on the block. Up nearly 55% in the past year, TSMC is the world's largest semiconductor foundry, producing chips for tech titans like NVIDIA, Apple, and Advanced Micro Devices. TSMC's market share expanded from 31% to 38% in Q2 2025, and it has continued to deliver huge sales growth into the third quarter. In August, TSMC's monthly revenue increased nearly 34% year over year to $335.8 billion, driven by strong demand for advanced AI chips, pushing the top line up by 37% year to date to $2,431.98 billion. NVIDIA CEO Jensen Huang has even praised the chipmaker, calling the stock a very smart buy in a visit to TSMC last month. TSMC's market position has consistently supported strong cash flow and profit margins, driving an A-plus profitability grade. With capacity tight and demand running high, TSMC has been able to maintain strong pricing levels. At the same time, cost improvement efforts have offset unfavorable foreign exchange rates and higher costs of new factories overseas. TSMC is especially firm compared to the tech sector in EBITDA margin, net income margin, and CapEx sales. TSMC's growth grade is driven by strong top and bottom line performance and strong upside earnings projections, with an EPS for the upcoming year long-term growth rate at 21%. In addition to the rapid growth and popularity of semiconductors fueling the AI boom, TSMC offers strong dividend growth, which includes a 5-year growth rate of 11.21% and a modest dividend yield. Although the yield is about average compared to the sector with a high payout ratio, the company has delivered a dividend payment for 20 consecutive years. TSMC earnings are projected to grow by almost 40% in fiscal year 25, and revenue by more than 37% to nearly $121 billion. As a high-growth, high-margin chipmaker with a dominant position in the global foundry market and strong momentum heading into the fourth quarter of 2025, consider TSM for a portfolio. Xiaomi provides smartphones, IoT devices, and smart electric vehicles alongside other products in China and internationally. Ranked number 3 in global smartphone shipments, behind only Apple and Samsung, smart EVs, IoT, and lifestyle products were the primary growth drivers in the second quarter. Xiaomi Q2 revenue grew more than 30% to $16.1 billion, driven by explosive growth in smart EVs. Focused on developing an interconnected ecosystem of HumanX Cars home products, Xiaomi's unique strategy aims to offer more value for money products. Xiaomi successfully launched the YU7 SUV in June and overall delivered a record 81,302 vehicles in Q2. IoT and lifestyle segment sales hit a record high, up 44% year over year, driven by strong growth in smart large home appliances. Xiaomi's A-plus profitability grade rests on an ROE of 17%, more than 200% above the sector median. At the same time, its top-notch growth grade is driven by an impressive surge in revenue, EBITDA, and levered free cash flow in the last 12 months. Xiaomi has average valuation metrics overall, but a price earnings to growth for trailing 12 months ratio of 0.38 represents a 62% discount to the sector. With a strong foothold in the global smartphone market and making huge EV strides, Xiaomi is well positioned for Q4. Gilat is a small yet fast-growing satellite communications company serving the commercial, defense, and internet services markets, up more than 130% in the past year. Gilat delivered major top-line growth in Q2 2025, with revenue rising 37% to $105 million, driven by Gilat's commercial segment, which grew by nearly 60% to $69.1 million. Gilat has recently boosted business with the Pentagon, securing a $7 million contract to provide transportable SATCOM terminals and support services to the U.S. Department of Defense. The accelerating adoption of Gilat's next-generation SkyEdge A4 platform and momentum in the in-flight connectivity segment helped drive commercial revenue. The Q2 results have boosted the satellite technology company's position to deliver even more growth, as Adi Sfadia, Gilat's CEO, said in the earnings release. These achievements and advancements strengthen our leadership in multi-orbit ground solutions and the emerging IFC market. We remain strategically positioned to accelerate revenue growth as we capture the expanding opportunities in mission-critical defense communications and next-generation satellite solutions. The tech sector is heading into Q4 with strong momentum, roaring back from April lows as the broader market experienced a strong rebound, boosted by massive AI-fueled spending on data centers, adoption of smart technologies, and expanding requirements for satellite communication solutions. Thanks for watching. See you next time.